Hello, and welcome back to Author's Note. As European investment banks begin to report their first quarterly results, there's one part of the business that investors will be watching closely: equity capital markets, where volumes and revenues have fallen dramatically since the financial crisis. But is this just part of the cycle? With me to discuss this is Craig Coben, Head of European Equity Capital Markets at Bank of America Merrill Lynch.
Thank you.
Let's have a look at what's been going on since 2007. So we've got total amount of money raised in billions, and we've also got a breakdown. So we can see sort of volumes going down dramatically, and then there's certain parts of the business that have gone down. Tell me, what's the story behind this chart?
What I think the chart shows is the enormous impact that the financial crisis and the slowdown in European economies have had on European equity issuance. I'd make three observations. First is that volumes have fallen over the last 4 or 5 years quite dramatically, even as stock market indices have hit all-time or multi-year highs. And the reason for this is that companies aren't investing in growth, and there is a lot less M&A, mergers and acquisitions, than you would otherwise expect. The second interesting feature of the chart has to do with the blue color, which are rights issues, in other words, capital increases. And you can see that in the aftermath of the financial crisis in 2009, European equity issuance was dominated by rights issues, especially by banks that had to raise equity in order to save themselves from financial distress. That process is starting to taper off, although I don't think it has come to an end, but you can see that the blue bar is much less significant in 2010, 11, and 12. The third feature of this chart has to do with the red bar, which is initial public offerings. And you can see the dramatic fall in the number of IPOs over the course of the last 5 years.
And that's companies coming to market.
Where companies list themselves on the stock exchange and issue new shares. What is actually quite striking is that in 2012, there were only 3 IPOs in the Eurozone over 250 million euros, of which only 1 outside of Germany. What that's telling you is that in a very large financial area or economic area, the process of capital formation has been stagnant, at least insofar as IPOs go.
I mean, what is really behind companies' reluctancy to come to the market?
There haven't been inflows into equities until fairly recently. As a result, when an investor doesn't have inflows, he or she is much less likely to invest in new issues unless there is a substantial discount on offer. And so we've had a breakdown between the buyers on the one hand and the sellers on the other, because the investors who are buying IPOs have demanded steep discounts.
And so let's have a look at year to date, what the picture looks like. Can we expect volumes to pick up this year? What's the story this year?
I do think volumes are going to pick up. The question is, what is the composition of those volumes? The green bar, which says ABB, represents accelerated book builds. In other words, overnight sales of equity of listed companies. This year we've seen an enormous amount of overnight sales as shareholders, especially governments, private equity firms, and other core shareholders have taken advantage of these all-time or multi-year highs to sell very quickly into the market. The most dramatic example were the 3 sales of over 5 billion euros of equity in EADS by the 3 core shareholders. That has dominated European issuance. The real question is whether it's going to be a much better balance over the course of the year as the IPO market starts to reopen.
So are we going to see a comeback in the IPO market specifically?
Well, we'll have to see. Q1 numbers are coming out for a number of companies in the next few weeks. Market conditions are reasonably good, but I don't want to say they're indiscriminately good. Most IPOs over the last 12, 18 months have traded well, but I still think there's a lack of confidence on the part of investors.
And what are the other factors behind a comeback generally in equity capital markets?
What we need at the end of the day is economic growth. Europe right now is a no-growth area. Half of the Eurozone is in a virtual depression, and the other half has very stagnant growth. As a result, it becomes very difficult for companies to IPO on the basis of a growth multiple. So most of the companies which have gone public have been defensive, yield-oriented names, which have been probably relatively much easier to sell than would otherwise be the case. But we haven't had a resumption of growth stocks.
Thank you, Craig Coben. So, as with so many things in Europe these days, whether the equity capital market cycle picks up is very much dependent on economic growth across the region.